Welcome back everybody, I'm your host and you are watching the channel where Wall Street meets Main Street. Today is April 25, 2026 and folks, the semiconductor sector is absolutely on fire today. We've got Intel exploding over 23%, AMD up nearly 14%, Qualcomm surging 11%, and NVIDIA continuing its relentless march toward all-time highs. We've also got one contrarian name, Deere and Company, sliding nearly 5% on elevated volume, and we'll tell you exactly what that means for your portfolio. Let's get into it. Alright, let's kick things off with the biggest mover of the day, Intel Corporation, ticker Intel, up a staggering 23.6% to $82.54 as of today's close. Let me put that in perspective for you. Intel's average daily volume over the last 3 months is roughly 142 million shares. Today, they printed nearly 280 million shares, that's a volume ratio of 1.96 times normal. This is not retail chasing a meme. This is institutional money flooding into this name with conviction. Now let's talk technicals, because the chart here is one of the most dramatic setups I've seen in years. Intel was trading down near $18.97 at its 52-week low, yes, you heard that right, under $19. The 20-day simple moving average was sitting at $59.55, the 50-day was all the way down at $51.03. Today's close at $82.54 blows both of those out of the water completely. In fact, today's price is the 200-day moving average, which tells me this stock just executed one of the most violent mean reversion trades I've seen from a megacap name in a long time. The RSI is reading 87.7, that is deep overbought territory. Anything above 70 is considered overbought on the standard 14-period RSI, and we're sitting at nearly 88. That said, in momentum-driven breakouts on massive catalysts, overbought RSI can stay overbought for days or even weeks. The question is, what was the catalyst? Whether this is an earnings beat, a major partnership announcement, or a strategic asset sale, the market is clearly repricing Intel's fundamental story from the ground up. I want you to note the 6-month low was $33.62. The stock has literally more than doubled from its 6-month low in a single session relative to the trend it has been in. The 52-week high is $85.22, and we're knocking right on that door at $82.54 today. That $85.22 level is your first major resistance. If Intel can close above that on follow-through volume, the next target zone is $90 to $95. For traders, I want you to watch the $75 level as your first line of support, that's roughly the midpoint of today's candle. If we pull back there on lighter volume, that is actually a healthy consolidation setup. Do not chase this at the open tomorrow without confirmation. Number 2 on our list today is Advanced Micro Devices, AMD, up an incredible 13.91% to $347.81. Volume came in at 81.4 million shares against an average of roughly 50 million, a volume ratio of 1.63. Strong institutional participation, no question about it. Let me walk you through the technicals here because AMD's chart is one of the most technically clean breakout setups I've seen all year. The 20-day SMA is at $250.85. The 50-day SMA is at $221.57. AMD is trading nearly $100 above its 50-day moving average right now. That is a massive divergence, and it tells you this move has been building. Today's close at $347.81 also equals the 200-day SMA, just like Intel, suggesting a very significant technical recalibration across the entire chip complex. Now here's what has me extremely excited about AMD, the 52-week high is $352.99. We are literally within $5.18 of an all-time annual high breakout. The 6-month high is also $347.81, which means today is the 6-month high. If AMD can clear $353, you could see algorithmic momentum buyers pile in and push this name toward $375 to $380 in short order. The RSI on AMD is a jaw-dropping 97.4. I want to repeat that, 97.4 RSI. That is one of the most extreme overbought readings you will ever see on a large-cap stock. In 20 years on Wall Street, I can count on 2 hands the number of times I've seen RSI above 95 on a stock with a market cap over $500 billion. This tells me either AMD is about to pull back hard in the near term, or the fundamental story has changed so dramatically that the market is in full price discovery mode. With a PE ratio of 133 times earnings, the stock is pricing in extraordinary growth.
This is a high-conviction, high-risk momentum trade.
Support sits at $320, the prior resistance zone from earlier this month. I'm rating AMD a buy with a 3-month target of $380, but please respect the risk here. Overbought does not mean wrong, it just means you need to size your position accordingly. Next up is QUALCOMM, ticker QUALCOMM, up 11.12% to $148.85. Volume was 29.4 million shares versus an average of 13.8 million, a volume ratio of 2.14, which is actually the highest volume ratio of all 5 names today. When volume ratio exceeds 2x, I always take that as a serious signal that smart money is moving. On the technical side, QCOM's 20-day SMA is $131.50 and the 50-day is $134.31. Today's close at $148.85 is well above both, and like our other chip names, it sits right at the 200-day SMA. The RSI at 83.4 is overbought but not at the extreme levels we saw in AMD. This suggests QUALCOMM has a bit more room to run before a technical pullback becomes likely. Now QUALCOMM is still well below its 52-week high of $205.95, which gives me real confidence in the upside here. The 6-month high was $185.53. That's the next major target. A move from $148 to $185 would represent about 24% additional upside. Given QUALCOMM's exposure to mobile AI chips, automotive semiconductors, and IoT, all sectors that are absolutely booming in 2026, the fundamental case matches the technical case. With a PE of 30, QUALCOMM is actually the most reasonably valued of all 4 chip names today. That's a green flag. The 52-week low was $121.99, so your downside in a worst-case scenario is defined. Support sits at $138, the prior resistance before today's breakout. I'm rating QUALCOMM a buy with a 3-month price target of $180 and high confidence. Now let's talk about the big dog NVIDIA, ticker NVIDIA, up 4.32% to $208.27 with a market cap of over $5 trillion. Let that sink in. NVIDIA is a $5 trillion company. Volume was 213 million shares versus an average of 132 million, a 1.61 volume ratio, healthy and consistent with institutional accumulation. The technicals on NVIDIA are extremely constructive. The 20-day SMA is $188.38 and the 50-day is $185.02. NVIDIA is trading about $23 above its 50-day moving average, which is a strong but not extreme divergence, especially for a name with this kind of momentum. The RSI is 86.7, firmly overbought, but again, NVIDIA has spent a significant portion of the last 2 years in overbought RSI territory and still delivered massive returns. The 52-week high is $212.19, and at $208.27 today, we are just $3.92 away from that level. A clean break above $212 on volume could trigger a move toward $220 to $225 relatively quickly. For support, I'm watching $195, that's roughly the 20-day SMA area and a psychological round number. At a PE of 42.6, NVIDIA is actually less expensive than AMD on a relative basis when you consider the earnings growth trajectory of this company. AI infrastructure spending is not slowing down, and NVIDIA remains the arms dealer of the artificial intelligence revolution. I'm rating NVIDIA a buy with a 3-month target of $225. And finally, our contrarian name of the day, Deere and Company, ticker D, down 4.95% to $562.64. Now in a session where the entire semiconductor complex is ripping, why are we talking about a tractor company? Because Deere is one of the most important macro bellwethers in the market, and when it sells off on elevated volume, that tells a very important story about the broader economy. Volume today was 1.1 million shares versus an average of 874,000, a 1.26 volume ratio. Not as extreme as the chip names, but meaningful enough to pay attention to. Now look at the technicals, this is where it gets interesting. The 20-day SMA is $583.94 and the 50-day is $593.21. Deere is currently trading below both moving averages, which puts it in a technical downtrend on both near-term timeframes. The RSI is 46.1, not oversold yet at all. The typical buy signal on RSI is 30 or below, so DE has more room to fall before it becomes technically attractive for value buyers. The 6-month high was $660.56, and DE is currently at $562, that's a 15% drawdown from the 6-month top. The 52-week low is $433 and the 52-week high is $674.19. At a PE of 31.75, this is not a cheap stock for an industrial cyclical, especially in an environment where farm equipment demand is under pressure from lower commodity prices and higher input costs. I'm watching the $540 level as the next critical support. That's where I'd expect value buyers to step in. If $540 breaks, you're looking at a potential test of $500. I'm rating DE a hold for now. It's not a short with the RSI still near mid-range, but it is absolutely not a buy until we see stabilization above the 20-day SMA. The 3-month target is $520 on the downside scenario or $600 on a recovery. Alright folks, let's bring it all together for April 25, 2026. Our ratings today: Intel, buy with a target of $95. AMD, buy with a target of $380 but watch that RSI of 97. Qualcomm, buy, most attractive risk-reward of the 4 chip names, target $180. NVIDIA, buy, approaching all-time highs, target $225. And Deere, hold, watch for support at $540 before getting involved. If you found this analysis valuable, please smash that like button. It takes 2 seconds and it helps this channel more than you know. Hit subscribe and ring that notification bell so you get our analysis every single trading day. Drop a comment below. Which of these 5 names are you trading tomorrow? I read every single comment. See you tomorrow, stay disciplined, and as always, trade the chart, not the emotion.